But let's welcome on board the management SBI Life Insurance, and we've got on board with us Arijit Basu, the MD and CEO of the company, joining in. Mr. Basu, hi, morning. Thanks so much for joining in. You have the highest private market share in the entire new business premium segment. Tell us, what is it that you plan to do and take up your market share forward from here? Because as we understand, competition in the segment is only heating up, and it's a very, very competitive industry that you're in.
Good morning, and thank you for having me. We are very happy. This is a very, as you said, we have been performing very well, not just in the recent past, but over the last 3 years. And this has been not just annually, but quarter on quarter. And we have been doing well, not just in new business premium, where we have gained substantial market share. I think we were somewhere around 14-15% 2 or 3 years back, and currently at 22%. But our aim is not just to gain top line market share. Our aim is actually to be a quality company with high profitability, and in those parameters also SBI Life has been scoring very well. We have been growing our profitability. Now this year net profit is up by 24%. In terms of costs, we have the lowest cost ratio in the industry at 7.5%. Our persistency ratios at 13th, 37th and 61st month are the best in the industry for 37th and 61st. At 69% and 59% respectively, and even in 13th month we have 81%, which is among the top 4 or 5 players. So our basic strategy, which you were asking, is to focus on all these together, look at the right product mix, and ultimately, since we are now a listed company, what the investors are looking at is how do we give better customer value, better customer satisfaction, and through that how do we improve our core profitability index, that is the growth in embedded value. So there also we have had a 20% growth in the first half of the year, and our margins have been steadily going up. So we started declaring new business margins in 2016 when we were at 14.5%, and we have now taken it already to 16% at the end of the end of quarter 3. So our strategy would be to continue doing all this, because the potential which is available in both our agency channel, which is by far the most productive agency channel in the industry, as also our bank partner SBI, which is very large, and where we have done much better than we used to do in the past, but we are seeing a lot more potential coming in the next 3 to 5 years.
Mr. Basu, the headline number is impressive, but my only concern is that ULIP accounts chunk of your revenue, and ULIP, we know at the end of the day, is a capital market dominated product. You know, we've had good days in stock markets, so it's great to see the growth in ULIP. What if a bear market comes? What happens to the ULIP portfolio? We've seen, you know, how ULIP portfolio collapsed for insurance companies when the bear market started after 2008.
Right, very good question. So ULIPs, we have a certain strategy around ULIPs. The first thing is that ULIPs are being positioned only to a certain segment of people who can understand, they are financially literate and who can afford to buy ULIPs, primarily the HNIs and the affluent sections in the metropolitan towns and urban areas. What happens is, in terms of number of policies, our ULIP sales are lower than our traditional both protection and non-protection together. In terms of number of policies, ULIPs sold are lower. ULIP ticket sizes tend to be higher, which is why in terms of premium, we are at around 65 to 70% in the individual segment. Overall, we are at around 55% as at the end of December, and by the end of March, we'll be at around 50%. Now, we are comfortable on this for 2 reasons. One is, you know, the ULIPs, they have an underlying fund choice which is left to the consumer. In case of SBI Life, contrary to what we see in other companies, we have a total ULIP fund of say 55,000 crores, of which more than 60% comes in from debt and 40% from equity. So therefore, you know, our customers by themselves have been more cautious, and therefore, obviously, if there is a market downturn, there would be an impact. However, they have themselves hedged the risk. The second point I'd like to make is that this is very different from what we had seen in 2008 to 10. The new product regulations make the ULIPs a much better and more attractive proposition, because you have to hold on for 5 years. And if you hold on for 5 years, what happens is that the initial years, the mortality expenses are charged, and therefore your chances of having a better return over 5 years is as good as any other instrument in the market. Second point that you need to understand is that the amount that we can now take away from the profitability that is offered to a ULIP customer is significantly capped at 2.5%. So if I were to show a 10% yield, I can cap my own return at 2.5%, which will include your commission, all your other expenses, barring the mortality expenses. So overall, it is the nature of the product which is substantially different from 2008 to 10. Second is the choice that is being made by our own customers. And most importantly, we are positioning ULIPs only to people who are able to understand the risks in the market, and also therefore making sure that we do not offer a wrong proposition to the customer.
As television commentators, we have to be sometimes the devil's advocate. So I'm pointing out areas where I think there is a challenge. Like ULIP was an area which you beautifully addressed. The other concern, what I sometimes feel for SBI Life, is that you are only dependent on SBI, and then because of your dependence on SBI as an agency partner, are you losing on the other opportunities?
That's what we are very happy that's what the investors have actually given us credit for. That was the perception of analysts and media and so on and so forth. But as I said in my